Hey guys, it's Sasha. Tesla published their quarterly results last week, and I was going through the numbers to update my valuation model. As I was digging into some of these numbers to understand them better, one thing struck me as being really odd. That thing was Bitcoin. Tesla made references to Bitcoin in the slides that they published before the earnings call, and then talked about Bitcoin on the earnings call, and then this morning, Tesla published their 10Q form that goes into a bit more detail still about Bitcoin. The big problem is that the information in those three just doesn't stack up, and that to me is quite concerning. You've probably already seen Tesla's Q2 results. I covered them live on my channel when they came out. If you weren't there but you would like to be there next time, make sure you subscribe to the channel and hit the bell so you get notifications as and when that happens, so you get the analysis live as the numbers come out. But I'm not going to bore you with the high-level numbers that you probably already know. And the issue with Tesla selling Bitcoin really had me raising my eyebrows though. And I know, how dare a Tesla investor not like something to do with Tesla? That is absolute sacrilege, especially on YouTube. The unwritten rule of talking about Tesla on YouTube is that you must at all times revere the company, praise Elon Musk as being the god, wear rose-tinted spectacles and declare everything to be absolutely amazing. But I have a feeling that maybe there are some of you out there who want to hear actual analysis and insight rather than just fan club commentary. So here we go, at the risk of getting a huge amount of dislikes. In January 2021, Tesla bought $1.5 billion of cryptocurrency, almost all of it being Bitcoin. And they then went and sold $272 million at a profit, leaving them with $1.33 billion at the end. The annual report filed in February 2021 had this paragraph that said, in January 2021, we updated our investment policy to provide us with more flexibility to further diversify and maximize returns on our cash that is not required to maintain adequate operating liquidity. As part of the policy, which was duly approved by the audit committee of our board of directors, we may invest a portion of such cash in certain alternative reserve assets, including digital assets, gold bullion, gold exchange traded funds, and other assets as specified in the future. Now, clearly the references to gold bullion and ETFs were just added to make this new company policy of buying Bitcoin sound a little bit better. So the stated goal was to maximize returns on our cash that is not required to maintain adequate operating liquidity. Fast forward to the last quarter, Q2 2022, and Tesla has now sold most of their Bitcoin. To be precise, they sold about 75% of their Bitcoin for $936 million worth of cash. And the reason Elon Musk gave for selling Bitcoin was because the Shanghai factory was forced to close and Tesla had to manage their cash position risks.
Yeah, actually, it should be mentioned that the reason we sold a bunch of our Bitcoin holdings was that we were uncertain as to when the COVID lockdowns in China would alleviate. So it was important for us to maximize our cash position given the uncertainty of the COVID lockdowns in China.
And this is where the problems really start, because Tesla has $18.3 billion worth of cash as of the end of last quarter. So even without the $936 million worth of cash that they got from selling Bitcoin, that's still $17.4 billion sitting in a literal bank account. They also have $591 million in short-term marketable securities. And by the way, in this quarter that Tesla were apparently really concerned for their cash position, they increased their short-term marketable securities by $83 million. Interesting. Now, when you add the $2.1 billion in accounts receivable, Tesla had over $20 billion worth of cash or cash equivalents before selling any Bitcoin in the last quarter. Tesla's total current liabilities as of the end of last quarter are at $21.8 billion. So Tesla has roughly enough cash at the moment to meet their liabilities for the next 12 months without having to sell a single car. And on top of that, Tesla has the Berlin and Austin factories that are ramping up fast, and the factory in Fremont has just set a record quarter. So unfortunately, the excuse that Bitcoin was sold to manage the cash position is bullshit. And the thing is, when you dig a little bit deeper into this mess, it gets a whole lot worse, because I'm going to look at the numbers. So in the 10Q that just came out this morning, it says, in the 6-month period ended June 30th, 2022, we recorded $170 million worth of impairment losses resulting from changes to the carrying value of our Bitcoin and gains of $64 million on certain conversions of Bitcoin into fiat currency by us. When Tesla bought Bitcoin Bitcoin during January 2021, the price of Bitcoin oscillated somewhere between $29,000 and $42,000. And in Q3 2021, Tesla posted a 5.3% impairment charge on Bitcoin, where the value dropped from $1.311 billion to $1.26 billion on Tesla's balance sheet. The lowest Bitcoin price in Q3 2021 was around $29,600 on July 20th. So if you add back the 5.3%, that means Tesla bought their Bitcoin at an average price of something like $31,300. Alright, this is going to get a little bit deeper. So Tesla added a further $170 million worth of impairment during Q2 and then made gains of $64 million on disposing of $936 million of Bitcoin during the quarter. We know that Tesla kept 25% of their Bitcoin from their report that came out just before the earnings call, and the lowest Bitcoin price during Q2 this year was about $19,000. At the end of Q1, Tesla had $1.261 billion of digital assets. So $1.261 billion times 25% times $30,200 minus $19,000 divided by $30,200 equals $117 billion. And that is the value of the impairment that Tesla would have posted on the Bitcoin they kept to the end of the quarter. So that means that Tesla booked about $53 million worth of impairment on the Bitcoin that they sold, which means that the value of that Bitcoin dropped by 5.6% from the lowest point it was ever at before the start of this quarter until the lowest point before the point at which they sold it. So the price dipped to around $28,500 if you do the math, which it did, incidentally, do roughly on May 18th. And then that Bitcoin went up in value from that lowest point, because remember, Tesla also made 6.8% in gains on disposal. So Tesla must have sold the Bitcoin at, roughly speaking, at an average price of $30,400. And selling Bitcoin in amounts of about $1 billion is going to take a little while. So they must have done it at some point based on this calculation between the 30th of May and the 7th of June. If Tesla was selling any Bitcoin when the Shanghai factory was first shut at the beginning of April, they would be selling at $46,000. So their gains would be roughly 50% of the value at which they would be selling. So they would have only been able to sell around $120 million of Bitcoin at that price. And even in late April at $40,000 per Bitcoin, Tesla would only be able to sell about $190 million worth of Bitcoin for that same 64 million realized gain. So using their own numbers, there is no other point during Q2 at which Tesla could have sold that large chunk of Bitcoin to hit those specific impairment and gain numbers. But on the 19th of April, Giga Shanghai had already reopened on a closed loop system, more than a month before the point at which they would have potentially started selling that Bitcoin. And full production in Shanghai resumed at the end of May. Remember, June was the record month for Giga Shanghai's production, so the numbers indicate that Tesla sold their Bitcoin after the whole Shanghai episode was over, after the lockdown had finished. In fact, Tesla was very lucky, because if they didn't sell during that narrow window when there was a little blip, they would have had to post on almost $500 million worth of impairment as Bitcoin's price plunged even further later on in June. To me, it just looks like Elon Musk realized that he made a bad mistake in gambling $1.5 billion worth of Tesla's money, and as the price of Bitcoin was going down, he decided that he needs to manage the risk and not go all the way down with it and get rid of that Bitcoin before it falls even further to maybe somewhere roughly break even. Q2 was already bad, so this was a damage limitation exercise. I guess the small amount of Bitcoin and Dogecoin that Tesla left over was there so that Tesla can pretend that they didn't just realize it was a giant mistake and that this isn't just a complete total liquidation of all of those assets, because if that was the case, that would look considerably worse. But the real issue for me is that this is pointing to a deeper problem for Tesla, which we all knew was there really beforehand, where all of the great innovation, for all the great engineering that Tesla is showcasing, there is this dark other side to the company where Tesla is happy taking on potentially unwarranted risks and potentially, gambling money. So as a Tesla shareholder, this is a pretty important risk to be aware of, and this time it didn't work out too badly. But next time it could get considerably worse. Whatever that next time is. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.